Hello everyone. Today, let's talk about how the recent sharp rise of the new Taiwan dollar has exposed a major ticking time bomb in US Treasury bonds. Also, since China isn't giving in, the US has to make concessions, leading to a China-US trade agreement. Trump is reducing tariffs, which has exceeded foreign expectations. A few months ago, starting from April 2nd, US President Trump returned to the White House and launched an event themed Make America Wealthy Again, announcing so-called reciprocal tariffs on various countries. After a month and 11 days of these non-reciprocal tariffs, China responded firmly and then announced a halt to the escalation. The US and China then issued a joint statement in Geneva, announcing that both sides would lower each other's tariffs by 15% for 90 days. Both sides agreed to establish a China-U.S. economic and trade consultation mechanism to resolve trade disputes, looking back to when the U.S. imposed unreasonable so-called reciprocal tariffs on various countries. It planned to add another 34% tariff on China and also issued warnings to other countries. They warned not to retaliate or else the US would definitely strike back. After China countered the US with a 34% tariff, US Treasury Secretary Bessent was furious, making a scene and claiming that China was the loser because US exports to China were only 1/5 of China's exports to the US. He said, "What's the point of China raising tariffs?" But China simply wouldn't back down and kept raising tariffs on the US all the way up to 125%, while the US in turn raised tariffs on China to 145%. Trade between the two countries nearly came to a halt. Looking back now, those words just sound pretty ridiculous, and China set an example for the whole world by daring to stand up to the US and fight back. The Health Party hoped I would hold talks. Afterwards, at the press briefing, I told reporters that both China and the US agreed during negotiations that neither side wanted to decouple, and we had a very heated discussion, with both sides showing great respect for each other. My conclusion was that we share common interests. We are both interested in trade balance, and things will continue to move forward in that direction. It's actually become much more normal for officials not to make statements like this nowadays. To understand how much tariffs are being reduced in the China-US agreement, you first need to know how much tariffs both sides had previously imposed. The first part is about the earlier US tariff increases. On February 4th, the US imposed a comprehensive 10% tariff on Chinese exports, citing China's export of fentanyl precursors as the reason, and China responded with the first wave of countermeasures. It was announced that a 15% tariff would be imposed on US imports of coal and liquefied natural gas, and a 10% tariff would be imposed on crude oil, agricultural machinery, large displacement vehicles, and pickup trucks. 1 month later, on March 4th, the US again cited China's countermeasures as a reason to impose tariffs on Chinese exports. An additional 10% tariff was imposed across the board, bringing the total tariff increase to 20%. China immediately responded with countermeasures, imposing a 15% tariff on US chicken, wheat, corn, and cotton, and a 10% tariff on products such as sorghum, soybeans, pork, and beef. Next, we move on to the second part, which is what happened after the US announced to the world on April 2nd that it would impose reciprocal tariffs. First, you need to understand that the US planned to add a so-called reciprocal tariff of 34% on China, and this was on top of the previous 20% tariff increase. After that, China retaliated by imposing a 34% tariff on American goods. The US then kept raising the tariff step by step to 84% and even 125%. If you add the previous 20% tariff increase on top of that, the total comes to 145%. At the same time, China retaliated in kind, raising tariffs on American goods to 125%. Now, according to the China-US agreement, the boundary is set as of April 2nd. On that day, the reciprocal tariffs of 34% on both sides were temporarily reduced to 10%, and the additional tariffs imposed afterwards by both parties were also temporarily suspended. After that, negotiations are to be concluded within 90 days, and any tariffs imposed by either side before April 2nd will be temporarily retained. The China-US agreement can be interpreted as follows. First, both China and the US each reduced tariffs by 115%, bringing the additional tariffs back to a more acceptable level. Trade between the two countries resumes. Second, the 20% plus 10%, that is the 30% tariffs on China, are not retained. However, it can't be said that China only keeps a 10% tariff on the US, because in addition to maintaining the basic 10% additional tariff on American products, China also imposes an additional 15% tariff on coal and liquefied natural gas, an extra 10% tariff on crude oil, agricultural machinery, and high-emission vehicles, a 15% tariff on American chicken, wheat, corn, and cotton, and another 10% tariff on sorghum, soybeans, pork, and beef. The increased tariffs on a large number of specific products are also being maintained at the same time. Third, no matter what, the United States wants to keep the so-called 10% reciprocal tariff. Do you believe it? This is probably the baseline Trump wants, for all countries to impose reciprocal tariffs of 10%. However, if everyone tries to impose the same 10% reciprocal tariff on the United States, I'm afraid it won't be so easy for other countries to achieve that. Fourth, as for my export controls on minerals, it seems that they will be suspended on or after April 2nd, but will continue up until April 2nd. Overall, the outside world generally believes that the results of the talks exceeded expectations. The comments from AFS Group's research director, Peter Meijsessi, a Dutch brokerage, are quite classic. He was actually surprised by the shift regarding the tariff issue. US tariffs on China seem to be dropping to a manageable level, although this is only temporary. After the 90-day suspension period ends, Trump could still raise tariffs on China again. But the speed at which tariffs are being reduced is faster than anyone expected. Everything is happening quickly, so to sum up though, first, as I quoted from Leader Zhang at the beginning of March, China needs to land a solid punch to avoid being hit by 8 punches later. It is precisely because China has been tough enough that we have today's negotiation results. Second, to sum up, after the US played its trump card by raising tariffs, when the standoff between China and the US reached a stalemate, it was Trump who couldn't hold out any longer and requested negotiations with China, which then led to a rapid agreement. Third, the negotiations over the next 90 days will of course not be easy. But the US has already shown its hand. Whether it's the supply chain, rare earths, or the US debt crisis, none of these issues can be resolved in 90 days, or even within a 4-year term. There's simply no way for the US to decouple from China, whereas China, on the contrary, can withstand decoupling from the US. So, what do you think? How many cards does the US really have to play at the negotiating table? In fact, the US is eager to de-escalate the China-U.S. tariff war. Besides issues like prices and rare earths, there's another major problem. The US debt crisis is on the verge of erupting. At the beginning of the month, Asian currencies, especially the new Taiwan dollar, rose sharply, exposing major issues with US Treasury bonds. On May 2nd, the new Taiwan dollar appreciated by 4% against the US dollar in a single day, and then surged again on May 5th. Over those 2 days, it gained nearly 10% in total, with the US dollar dropping as low as 29.16 new Taiwan dollars. This was the largest 2-day surge since 1983, when the new Taiwan dollar began its so-called managed float. After this, the new Taiwan dollar eased slightly, but its momentum remained very strong. The strengthening of the new Taiwan dollar also reminds people of what happened to Japan after it was forced to sign the Plaza Accord in 1985. With the sharp appreciation of the yen as a backdrop, there have also been many voices within Taiwan questioning the Lai Ching-te administration's poor management, allowing the new Taiwan dollar to rise so dramatically, which will make it much harder to do export business in the future. Media outlets like Alpha Workshop have been following this closely. The economic factors behind the surge in the new Taiwan dollar are related to the fact that Taiwan's life insurance companies hold large amounts of overseas assets. Last month, the Financial Times also published an article highlighting this phenomenon in Taiwan and the potential risks it carries. Over the past decade or so, the overseas investments of Taiwan's life insurance companies have actually become a tool for the authorities to prevent the appreciation of the new Taiwan dollar. In fact, it even serves as a kind of hidden foreign exchange reserve. At the very least, with such large-scale money printing, the US dollar should have depreciated, but the new Taiwan dollar, if the new Taiwan dollar keeps appreciating, it would be unfavorable for sugar exports. Both the Taiwanese government and private sector mainly transfer foreign exchange overseas to buy US Treasury bonds. In fact, they already hold over $1.5 trillion in American bonds, mostly treasuries. This behavior, similar to what Japanese players have done, also serves to suppress the appreciation of the new Taiwan dollar. However, as Taiwanese life insurance companies continue to invest in US treasuries than strictly hedge, a currency mismatch arises if the US dollar depreciates sharply and the new Taiwan dollar appreciates significantly. Their investments in US treasuries will suffer heavy exchange rate losses. Under the policy of maintaining the interests of instructors through joint petitions by police and civilians, and with a relatively flat yield curve for most Asian economies, if they engage in currency hedging, they need to purchase additional hedging instruments such as options or currency swaps. This will increase the cost of buying US treasuries. After hedging, long-term US bonds are no longer attractive. The reason why Taiwanese life insurance companies keep buying US treasuries and hedging is supported by the so-called US asset exception theory, because the US holds dollar hegemony and US assets. It's believed that the US dollar will only rise and not fall. In the past 4 years, the US asset exception theory has been very popular, so buying US treasuries while hedging currency risk was considered unnecessary. After all, the US has the powerful AI narrative, and there's a belief that global capital will continue to flow into the US. It seems that both the US dollar and US treasury yields can remain strong for quite some time. As a result, Taiwanese life insurance companies hold 80% of their liabilities in new Taiwan dollars, but less than 40% is invested in NT dollar assets, Most of their investments are in US Treasuries or US dollar assets, relying heavily on the hope that US interest rates will stay high for longer. In other words, they expect rates to remain elevated, so they can continue to enjoy high returns. But within just 3 months of Trump taking office, his actions have shaken the world's confidence in US assets and the credibility of the US dollar. This has caused a crack to appear in the strategy of heavily investing in US Treasuries and relying on hedging, and that crack is starting to widen. The weakening of the US dollar, the sharp drop in US Treasury prices, and the rise in unemployment have caused shrinkage in the market value of dollar-denominated assets. Since companies have not fully hedged against exchange rate risks under Taiwan's accounting regulations, gains and losses are reflected. Although each time there are changes in operating gains and losses, they are reflected as unrealized gains and losses on the balance sheet, which can also impact the solvency of insurance companies, such as leading to a downgrade in their ratings. Therefore, for decision-makers at Taiwanese insurance companies, promptly reducing or recovering losses becomes a top priority. One option is to sell US Treasury bonds at this time, but in most cases, this would realize the floating losses, resulting in a significant decrease in current profits. That is, the impact would be immediate. This possible approach is to try to close off the loophole in the US dollar exchange rate as much as possible, reducing the further impact of exchange rate fluctuations on asset prices. In other words, to immediately carry out currency hedging. However, the act of hedging the Taiwan dollar exchange rate itself is essentially equivalent to selling US dollars and buying Taiwan dollars. This will push up the Taiwan dollar exchange rate, and at the same time, your hedging costs will surge, because the scale of overseas bond investments by Taiwanese life insurance companies is huge in new Taiwan dollars. The market simply cannot bear such a large amount of hedging demand in a short period of time. Even food and beverage companies can't get enough hedging instruments, so there's even more competition. Asian currencies related to the Taiwan dollar have already become an implicit hedging tool for Taiwanese life insurance companies. In other words, from the Korean won, Singapore dollar, and renminbi, to a range of Southeast Asian currencies. Will Taiwan's life insurance companies buy it? Currency is used as an implicit hedge to hedge the risk of the depreciation of the US dollar. What if the appreciation of major Asian currencies against the US dollar since May is the same as that of the new Taiwan dollar? Make a scatterplot of the correlation coefficient of currencies in the past 3 years. You can see a strong positive correlation. That is, the higher the correlation a currency has with the new Taiwan dollar, the more sharply it has appreciated since May 3rd. This proves that Taiwanese companies are likely buying these currencies as a form of implicit hedging, and from this, we can roughly deduce the subsequent chain reactions. First of all, the investment approach seen in Taiwan and Seoul over the past decade is not uncommon. Whether it's Japan, Europe, or the capital that has rapidly emerged from Hong Kong and South Korea in recent years, they all generally face a similar issue, namely buying US Treasuries without hedging. However, the scale of investment is not as substantial as in Taiwan. So, according to data from American banks, the proportion of unhedged US dollar assets in the investment portfolios of insurance and pension units has risen from 25% in 2022 to nearly 40% in 2024. Taiwan's main move has been to step up measures to hedge against the depreciation of the US dollar. This could very likely lead to more imitation among peers, and it may also cause the issue of Asian currency appreciation to spread to European currencies. Secondly, the demand for US assets from life insurance and annuity industries outside the United States will also drop by a notch. They will abandon US Treasuries and seek other investment targets. Taking the same real asset company as an example, after increasing currency hedging, the yield on 30-year US Treasuries post-hedging has become completely unattractive. Among 30-year government bonds with hedging, Japanese and French government bonds appear extremely attractive, especially Japanese government bonds, which do not rely on external financing. The 12th appreciation, and it's likely to continue in the future. To put it simply, first, Trump's Mar-a-Lago agreement, which aims to use the devaluation of the US dollar to evade debt, has a fundamental problem because a rapid drop in the dollar would cause capital to flee uncontrollably. In the end, this would cause a blow-up in US Treasury bonds, leading to a massive financial crisis in the United States. Second, the sharp appreciation of the Taiwan dollar is actually due to Taiwanese listed companies making large investments in US Treasuries as a hedge, and when faced with the crisis of a falling dollar, they rushed to sell, which caused this situation. In fact, other capable companies are facing similar issues. It's just that the scale isn't as large. Taiwan's massive holdings of US Treasuries are like a huge bomb that could go off at any moment, triggering a self-made crisis. I believe the Trump administration has also started to realize this risk. That's why they are willing to reach a consensus with China as soon as possible, hoping to defuse this bomb.